I hope all of you are well. How was your trading week? I hope it was exciting. If you had a bad trading week, please comment down below. If you had a good trading week, comment. Challenges you faced, comment. Questions, comment. We'll talk about the reason I wrote the Bible, the entry Bible. Now, the entry Bible and the major round number hack are piece by piece concepts put together to address SB trading pattern. Now, one of the most important job of a trader is to identify something on the chart and refer back to your playbook. That is to say, if you face any challenges on your chart or how the market is behaving, um, there are mentors who have written series of books about that particular behavior. So this is a behavior I want to show you guys on the CHFJPY, a trade I took this Friday before the market closed. Now, I just want you to read the guidelines of balanced market. Stacy won't tell you guys this. Okay, the guidelines of balanced market. The market wants more information before it begins its next directional auction. Remaining within balance defines the balance or tightens the balance. The tighter the balance range becomes, the greater the odds that a breakout from that balance will be more dynamic. Now let's take a look at what I'm talking about. Now, when the market is in balance, now we have our opening range low, opening range high. Okay, now the market trades in balance. Okay, you see the market tightens, the balance area tightens the more. Okay, you see how it goes. Okay, remains inside a previous day's range. Remember, an inside day is a market that is in balance. That is why a breakout of an inside day will be 80% of the time dynamic. Okay, this is why it is written here. Okay, the tighter the balance range becomes, the greater the odds that a breakout from that balance will be more dynamic. Now, if you zoom out on this chart, you can see how tight that range is. Okay, now you see the breakout of that balance area. You see, we broke out, we pulled back, we are out of balance now. Now you see the breakout of the balance area became dynamic and we had a very good explosion to the upside. Okay, so in balance market, when the market goes out of balance, okay, it gives us a wide region day. Okay, now we go back to the Bible, the basic rules of balance market. Go with the breakout from the balance. Now, GBP Swiss franc and Swiss franc JPY, sorry, go with the breakout from the balance. Now you see the market broke out of that balance area, breakout, pullback. We are supposed to go with the breakout of that balance. So we are supposed to go in line with the direction breaking out of the trading range. Al Brooks will say a trading range. We have trading range breakout. Jim Dalton will say in balance breakout. Okay. Now we go back to the ebook again. Is it fade or go against a failed breakout? Following a failed breakout, the odds sharply increase that the market investigate the opposite extreme of the balance. Okay, if the opposite extreme of the balance is reached, reapply the balance trading guideline. Okay, now what he meant by this, if the opposite extreme of the balance is reached, reapply the balance trading guideline. This is the trading guideline. Okay, now if the opposite direction, let's say if this market had went to the upside and broke out and failed and broke out of the other opposite side of that balance area, we are supposed to go in line. That is, the market will give us a dump to the downside. Now let's go back again. Now these are the basic rules of balance market. It's in the Bible. Okay, now we have example of an out of balance market underneath previous day's low. Okay, you see the out of balance zone, in balance zone, the market goes out of balance, reverses back and stays underneath the previous day's level. We have our opening range low. When the market is underneath that and above the opening range high, the market goes out of balance. So we have examples here. Okay, now there are other rules of balance market, okay, which is in the ebook here. Okay, let's take a look at that. These are examples of 3-day setup inside the template. We had that day 1, inside day 2, day 3 reversal evolves to a first red day. 3-day setup evolving to a first red day. We had that on the AUD NZD. Okay, just a brief example. You can see that 3-day setup evolving to a first red day. Day 1, day 2, day 3, lower high major trend reversal, first red day in Asia. The box, low of the box reversal. So the market forms a box, the market goes back to the edge of the box, failed at the opening range low, the market returns back in balance. So what the market investigates the opposite balance area, it broke out, okay, and then it reverse it back inside. So do the market stay out of the opening range, or do they reverse back inside? Traders who try to sell here will be in trouble. This is why it is very important to have this screener, these levels showing you your opening range high and opening range lows. Now we go further to look at more instructions on balance markets. Okay, we have more on balance markets. We have more on balance markets. I know. Let's see. More on balance markets should be down below. Okay, yeah, more balance markets. Now, out of balance market and how price behaves at the numbers. Now, the opening range of the market is important. It's important market generated information. A market that opens within value is generally in balance and waiting new information. A market that opens outside of value is out of balance and carries with a greater opportunity and risk. Okay. Now, when the market closes in breakout and closes outside of the opening range of Monday, this is when it carries with greater opportunity and risk. Okay. When the market is out of balance, it has huge possible potential for a wide ranging day if price accepts that area. So you see, for the CHF JPY, if price accepts that area, okay, breakout, pullback, trend, and reverse and range is an example of when the market goes out of balance, searching for buyers or sellers. If it does not find any new business, it returns into the existing profile, which is a false break reversal. This is what happened here. What happened here? Okay, it did not find business, it reverses back. This became what? A false break reversal or a failed breakout back into the previous day's range. Now you can see if market breaks out and it's accepted. So the market breaks out of balance and it's accepted. Price accepts out of balance, breakout, pullback, returns back, pulls back again. As long as we are above the moving average, the market has accepted that breakout and we are going to the opposite direction. Okay, so it is balance guidelines is here in the Bible because I know the importance of it. Okay, I know the importance of it. Now we have opened outside of range rejection. When the market opens beyond the previous day's range and is rejected back into the range, the potential for a dynamic price move in the direction opposite to the opening range breakout is set to motion. Okay, so these are guidelines of balance market. How price behaves at number. If you have your round numbers, if you have a breakout pullback like we had yesterday on the AUD USD, I had to apply that AUD USD. I had to apply that knowledge of we are out of balance. We are 3-day setup blowing off in the direction of the trend. I told the student on mentorship this market will not reverse because normally when the market is out of balance, we have to go in line with the balance because that is the law of what balance guidelines. So remember, as you are trading, there are laws and rules that governs the market. We have rules from Al Brooks, Peter Brandt, Jim Dalton, other professional veteran traders which are very old men today. Now let's take a look at this. Now let's take a look at round numbers. Let's look at round numbers. How does price behaves at numbers? Let's take a look. Let's put on our number levels. So number levels are on now. We go, how does price behaves at the numbers? So we look very well. We see that the market broke out and pulled back to what? To 25. Okay, So you see, we came back to 25. Now, how does price behave at 25? Okay, remember, as I'm looking at this market, I'm also looking at the concept of the moving average. Okay, I'm looking at the concept of pullbacks in a bull trend. I'm looking at out of balance. I'm looking at how does price behaves at the number. Okay, now we broke out the pullback. We pulled back to where? 25. Now let's read about how price behaves at the numbers. Now, how price behaves at the numbers. Okay, trap volume down low in a quarter level. Okay, targeting the simplest and easiest setups. Identifying median price either being at a quarter level or a round number level as the structure sets up. We could form a thesis on the day for either a trend trade or a reversal trade scenario. It is important to understand that if you are inside a high and a low, that essentially you are in the middle and there are stops below and above. And at some point in the window succession, they will go outside of the range to hit stops. Or if it's a trend trade, to squeeze and continue that move. Okay, you see? So if it's a trend trade, to squeeze and continue that move. Now, it is important to get feel that the numbers are near the numbers or closing price. Okay, it's very important. Not randomly picking a level when price gets there. It's about how price behaves when we are at the high or low. Okay, now when the market pulled back, broke out and pulled back to quarter level 75. Okay, how is price behaving at the quarter level? Okay, what is the moving average doing? Remember, Al Brooks do not trade against the moving average. So the market broke out, pulls back in London to the double zeros. How is price behaving at double zeros? Okay, the market is giving bullish candles. Okay, closing above the EMA. The market broke out again, pulled back to quarter level. How is price behaving at the quarter level? What type of candles are forming at the quarter levels? Are we above the moving average? Okay, these are just simple things we apply. This is Stacy applies this, but he wants everybody to go home and do the work. There must be people who would study this and help others understand it better than Stacy. So I just want to let you guys know that the reason for your playbooks, why you have that playbook there, is for you to refer back. Okay, for you to refer back and know how you are going to trade it. Now look at this GBP USD. You see it's a strong bull breakout. What did I do? Okay, I understood the structure why I held my trade. It's a strong bull breakout. Now I go back to the entry Bible. Okay, I go back to the entry Bible and I go to Al Brooks. Now we go back to Al Brooks. We look at what the market is in a strong breakout. Now you see there's a breakout. Every bull chart has one or more of these four patterns. We have a tight bull channel, we have a breakout, we have a broad bull channel. Now a strong breakout like this was showing on the 4-hour, but then when you go to the 1-hour, guess what? It becomes a tight bull channel. No, it's even still a strong breakout. If you go to the 45 minutes, it becomes a tight bull channel. So you see, so one of these charts, looking at it, we have a tight bull channel, we have a breakout. So we understand what happens in a bull breakout, understand what happens in a tight breakout, then we go to smaller time frames and see how we can execute that market based on what we have learned from these men. So it's as simple as that. May the markets go with you. You see, those who were expecting 3 days of breakout to reverse, it did not reverse. How does price behaves at the numbers? We have the market formed a pattern, reversed back to 50 and continued to the upside. So round numbers have been the backbone of SB trading for a very long time. We use before, when there was no closing price. I know most of you who are here who started with Stacy a long time, there was no closing price. There was just round numbers. Now today, round numbers have been put to the side, but I still use the round numbers because I want to see how price is behaving for me to understand what is happening. Now, the trade I took yesterday in London, and GBP Aussie reversed. Now, if you look, it reversed. Now, I came here. You see, we bought in London. Okay, we actually bought in Asia. Okay, the market took me out, but we bought in London. the market goes, gives a 3-session setup and reverse back in balance. So we're out of balance, but the market going back in balance gave me market generated information. Sorry, we came back in balance, but the market going back out of balance gave us information that this market will reverse. Okay, so traders who saw this, because I had already left that market already, they pull back in the US session. Okay, 3-session setup, pulled back, big bear candles closing near their lows. Brooks talks about this. Okay, when you see more than 3 in a 3-session setup, that market violated that buy setup in London. Asia, London traders, we had a good buy. US reverses that market back out of balance. So when the market returned back out of this line here, that was where traders should follow the balance guideline. That is to say, we are supposed to sell going back out of balance. Okay, it also happened on the Euro NZD. Look at that. Look at that. So you see, the market gave us a good buy in London, reversed indefinitely, and give us a reversal back to the opposite side. Now may the markets go with you. Remember, trade what you see, follow the rules of your mentors. When Stacy tells you, read Peter Brand's book, read this book, read that book, my dear brothers and sisters, go and read that book, because you will know more than what he is putting out there. But the markets go with you, 1% better every single day. See you in the next one. I hope this gives you value. The link to the major round number hack and the indicators are in the description. Do well to like and share this video. May the markets go with you. Thank you.